Good morning. Welcome to Beyond the SEAF Model. I'm Jack Kosar. This is effective for the week of March 3rd, 2025. Let's get started. SEAF signals for this week. We have retaining financials and communication services, and we've replaced technology with healthcare. Healthcare coming roaring out of what was previously a at the bottom move. We'll show you a little bit what happened there in our rainbow chart in just a minute. Other kind of key things to note is seeing that there's a positive move we're seeing in real estate, still in that kind of middle ranking, but I really like to see when we go from 8 to 5 to 4 in that kind of positive momentum area. We'll need a little bit stronger flows, as we'll mention here in the heat map in just a second, but just positive to see there. Like I said, technology kind of rammed on his face here, dropping all the way down into its avoid ranking. We are picking up a little bit more avoids than we have been seeing over the last probably couple of months. And consumer discretionary takes on the bottom with some pretty decently low numbers. Moving on to our heat map. What are we seeing here? Healthcare coming out of nowhere. 0.66 on inflows. This was after, healthcare's been kind of toward the bottom for a better part of the last year. And that 0.66 is real strong, especially with the, if you've been listening to my last couple of videos, flows have been relatively weak. We have not seen a lot of managers really looking to take aggressive positions on any one side or the other. That has kind of opened up healthcare with a very strong week to be able to kind of shoot up the boards here. Again, on the flip side, technology coming out negative 1.13% outflow. That was a giant outflow in technology after last week. It started on Friday and kind of really continued over the course of the entire week. Really strong outflows in technology. It was kind of so strong, really even took over into that tactical month. Overall, seeing greens up top, reds on the bottom. We are seeing a lot of intermediary flows. Were still relatively weak in the beginning half of last week, kind of strengthening up. Flows for the week, we were net negative down last week, 0.351 for all 11 sector spiders. We actually had a negative 1% outflow on Thursday. That was countered by a positive 1.3% inflow on Friday. So a little bit of mixed messages, but 4 of the 5 days were negative last week. And again, overall negative on the day. Market's currently down. We won't have flow data till later, but generally what we're seeing a little bit of speeding up. I'm seeing some managers take a little bit more on the offsides. Like I said, healthcare at 1 at a 0.66, which is significant. Anything over 0.4 on a trading week shows a little bit of conviction on either side of either direction. And technology had a pretty large outflow. Again, I was looking at real estate kind of in that positive direction. Now, flows aren't terribly strong for real estate, but I do like to see that going from negative to positive to a slightly more positive. Communication services taking a little bit of break on the trading week with 0.08% inflow on the week. And at number 2, financials, at relatively strong for number 2 at a 0.36. So overall, seeing some nice flows here up at the top. I do like how things, the board's kind of restructuring itself. Healthcare is obviously defensive, which, if CPM is currently risk off, so if that model is directionally correct, showing the defensive sector popping in is consistent. Moving on into our rainbow charts. I just want to show you technology. We've been seeing this with technology really, for the last 6 months. Rapid moves up into favored, rapid declines into avoid, and it's like a heart attack, just kind of going up and down, up and down. This one's real strong on the down, really strong relative underperformance for technology after we spiked into favored last week. We're just gonna have to keep an eye on it. The way these flows are moving, they're in this case it was hyper aggressive. We have not been seeing overall aggression in flows, but real strong outflow for technology. Still trading in this box though, so I just want to kind of keep everybody's level set expectations. We've been seeing a lot of whipsawing in technology, but overall in this relative performance part of the chart, we are still trading within this box. We are testing the lower bounds here. We'll have to see what flows look like next week if we can break out of this pattern and we actually start trending in any one particular direction. But tech has really been sideways for the better part of the last 6 to 8 months. And it stays in that. So even though we had a deep avoid, even though we had a big move in the relative underperformance versus SPY, just for context state, we are still in this box. If this market's going to take another leg down lower, we probably would want to see technology break out of this box and its underperformance and kind of start to head out in this lower part of this direction. But again, we're not forecasting anything, so this is a wait and see situation. Check out this space going forward. We will continue to look at the technology chart over the next couple of weeks. Financials, a little bit of reverse. Financials having a nice long relative outperformance run over the last 6 to 8 months. Sitting up in this upper favored, we are getting that nice extended relative outperformance. I'm actually going to have to change the the side panel here so that we're not creeping into a void on the relative outperformance, which is a good thing. Financials remains strong. Healthcare coming in. We had a couple of tests on healthcare over the last couple of months, starting in, looks like end of January. Tried to come up, failed, and real strong inflows for healthcare on the trading week. Looks to have breaking that, what was a little bit of an upward resistance on the rainbow chart for healthcare, and breaking out also on the relative outperformance. There's a little bit of if you can imagine a line here, really kind of having a little bit of a breakout. We got some room to run. Healthcare was a relative dog in all of 2024. Would be nice to see, again, the defensive sector, Asbury 6 or CPM is risk off. So looking for hopefully some continued flows into healthcare for that positive relative outperformance that we're starting to see emerge on the chart. Hopefully we, potentially break in trend after having a nice long downtrend for healthcare. Communication services, like I said, we saw a little bit of a let off the gas in terms of the trading week, but still showing a lot of strength in the strategic quarter and the tactical month, 1 and 2 respectively. We are spending some nice time in this upper favored ranking, which is correlating with some really nice relative outperformance for communication services. This is a good place to be in. Still seeing strong flows. We'll see if this trading week continues to be a longer trend, or if this is just a little bit of a break for communication services after a strong couple of weeks. Consumer discretionary, want to show you the good with the bad. Touched up into upper favored at the end of October, early December of last year, and has been trending downward really ever since. We had a brief interlude back into favored, but that has failed, and we are starting to trend downwards for consumer discretionary in the relative performance side of things. Deep avoid, it is actually our worst sector in our model. Last but not least, I mentioned real estate. Real estate it's currently in neutral. It's not a favored. It is not a SEAF signal, but we are just seeing some positive things, positive flows coming into real estate. I believe, we're seeing some nice little bit of relative performance spike. We're going to have some upward resistance here momentarily in this relative performance chart. But again, I like to see when it goes from negative to positive to even more positive when you're going from strategic to tactical to trading. We are starting to see that. We would definitely need to see some stronger flows. We were only at 0.1% inflow on the trading week, so we need to see some accumulation as well as some acceleration in flows for this thing really to take off. But we are seeing some positive things in real estate. That is all I have for this week for breaking down the SEAF model. We actually did have a couple of questions over the weekend that I wanted to address regarding SEAF and then SEAF Ultra. One of the questions was healthcare. So healthcare was deep avoid last week, and it shot up into the favored territory at a ranking of 10. I think it went from 29 to 10. What we see there and what ended up transpiring is we had some really strong outflows for the strategic quarter going back a couple of months. So, it's a 3-month look back. A little bit beyond that, we had some really strong outflows from healthcare. And then from there, we've had a period of really, and I've been talking about this, really light flows. So what that does is it takes a trading week with healthcare with a really strong inflow, and as some of those larger flows kind of got kicked out of the back, and we brought in a strong flow, it was able to kind of flip the script on healthcare in a relatively short order. It's just the kind of nature of how these things go. Because we're tracking flows from several different time periods, as we start to see flows fall off the back end and there's a weak period in the middle, any strength or flow is really going to shove that sector up into this upper part, and that's what we're seeing here. So it's not, it's not a miscalculation. It's not, the model is not misbehaving. It's just the nature of how the model reacts is if we have a string of strong flows for 3 or 4 weeks or months at a time, it's a little bit harder for those sectors to then on one trading week move up, because flows have been really, really soft over the last couple of weeks, even arguably months, as some of those stronger flows kicked off of healthcare in the back end, as well as picking up some of the new strength and flows, which is how it was able to propel itself. Second question that we got over the weekend was talking about SEAF Ultra. So I wanted to try to clarify some things with our SEAF Ultra versus SEAF. The first thing to mention is they are completely separate models in the sense that SEAF does dictate the top 3 in SEAF Ultra, but SEAF does not, the strength of flows in SEAF does not dictate whether or not we're going to go to a 2-time lever or a 1-time lever in SEAF Ultra. So the question specifically was, why would we sell out of a 2 times financials into financials? There was a little bit of confusion on it. And what that was saying was, in SEAF, the top three or the 3 signals for this week were financials, communication services, and healthcare. What happens is those 3 get put into a separate model that calculates it out for Ultra. To get a 2-time lever in SEAF Ultra, you have to have 3 things going for you. There's an article on our website that you can read that really details out exactly what SEAF Ultra is, but you need positive relative outperformance. You need a positive 1 times 2 times comparison, which is that you have a good, the 2 times in a particular sector is relatively stronger than the 1 times. And then the third one is asset flows. And in order to get a SEAF Ultra signal, you'll need all 3 of those criteria to be positive in order to maintain or to go into a 2-time lever ProShares sector. In this case, this week, XLF did not have all 3 criteria. So we are going to go from a 2 times to a 1 times. The way I like to explain it is there are special situations in SEAF Ultra that we notice that we want to put on the gas. In this case, this week, healthcare has all 3 of those positive attributes, and we'll be using the 2 times healthcare in SEAF Ultra. We are backing off the 2 times from financials because we don't have all 3 criteria. Now, again, still seeing a lot of strength, as we can see, a lot of strength in financials. It just didn't have all 3 of those criteria, and because it's a separate model, we are treating it as such. I'm not going to say, oh, well, financials is top in SEAF, so it must be a 2-time lever in SEAF Ultra. That's just not how the model was built. We wanted these very special situations, and in times where there are no special situations, the SEAF Ultra model defaults just to the 1 times for all 3 criteria. I hope that answers your guys' questions. And please keep them coming. Talking SEAF numbers is probably one of my favorite things to do. It's why I do this video every week. And you can go to the Asbury Research contact page and submit a question or schedule some times with us to talk about SEAF a little bit more if you have any questions. I'm always happy to talk about it. So, please keep those questions coming. I would love it if every week I'm able to address some client questions about SEAF, so please send them in. That is all I have, and I hope everything was helpful, and everybody have a great week. Thanks.